What's going on, YouTube? Listen up, young elder gang. This is Joe Blow at you with another banger. Please make sure you like, subscribe, and share this video, fam. I hope this video get at least 100,000 likes. In this video, you will find history definitions, scripture information, and best of all, what we Americans have been deprived of from the beginning, the truth. Keep in mind, this content used in this video is intended for entertainment, educational, and informational purposes only. We will give you the total truth as we best understand it today. Be sure to hit that like button. Young Elder Gang, hit that subscribe button. If you're new to the channel, hit that bell, and don't forget to check back with us every day for new content. The Cold War was a period of global geopolitical rivalry between the United States, US, and the Soviet Union, USSR, and their respective allies, the capitalist Western Bloc and Communist Eastern Bloc, which began in the aftermath of the Second World War, and ended with the dissolution of the Soviet Union in 1991. The term Cold War is used because there was no direct fighting between the two superpowers, though each supported opposing sides in regional conflicts known as proxy wars. In addition to the struggle for ideological and economic influence and an arms race in both conventional and nuclear weapons, the Cold War was expressed through technological rivalries such as the space race, espionage, propaganda campaigns, embargoes, and sports diplomacy. After the end of the Second World War in 1945, during which the US and USSR had been allies, the USSR installed satellite governments in its occupied territories in Eastern Europe and North Korea by 1949, resulting in the political division of Europe and Germany by an Iron Curtain. The USSR tested its first nuclear weapon in 1949, 4 years after their use by the US on Hiroshima and Nagasaki, and allied with the People's Republic of China, founded in 1949. The US declared the Truman Doctrine of containment of communism in 1947, launched the Marshall Plan in 1948 to assist Western Europe's economic recovery, and founded the NATO military alliance in 1949, matched by the Soviet-led Warsaw Pact in 1955. The Berlin blockade of 1948 to 1949 was an early confrontation, as was the Korean War of 1950 to 1953, which ended in a stalemate. U.S. involvement in regime change during the Cold War included support for anti-communist and right-wing dictatorships and uprisings, while Soviet involvement included the funding of left-wing parties, wars of independence, and dictatorships. As nearly all the colonial states underwent decolonization, many became third-world battlefields of the Cold War. Both powers used economic aid in an attempt to win the loyalty of non-aligned countries. The Cuban Revolution of 1959 installed the first communist regime in the Western Hemisphere, and in 1962, the Cuban Missile Crisis began after deployments of U.S. missiles in Europe and Soviet missiles in Cuba. It is widely considered the closest the Cold War came to escalating into nuclear war. Another major proxy conflict was the Vietnam War of 1955 to 1975, which ended in defeat for the U.S. The USSR solidified its domination of Eastern Europe with its crushing of the Hungarian Revolution in 1956 and the Warsaw Pact invasion of Czechoslovakia in 1968. Relations between the USSR and China broke down by 1961, with the Sino-Soviet split bringing the two states to the brink of war amid a border conflict in 1969. In 1972, the U.S. initiated diplomatic contacts with China, and the U.S. and USSR signed a series of treaties limiting their nuclear arsenals during a period known as détente. In 1979, the toppling of U.S. allied governments in Iran and Nicaragua and the outbreak of the Soviet-Afghan War again raised tensions. In 1985, Mikhail Gorbachev became leader of the USSR and expanded political freedoms, which contributed to the revolutions of 1989 in the Eastern Bloc and the collapse of the USSR in 1991, ending the Cold War. All right. Let's peel back the curtain on a side of history that often gets overlooked. We're diving into the Cold War, a period that shaped the world in ways far beyond just politics and military might. It was a long, nerve-wracking standoff between the United States and the Soviet Union, each daring the other to blink first, with the world holding its breath. While the headlines screamed about ideology and national security, there was another powerful force at play: money. Mountains of cash didn't just fund bombs, they also lined the pockets of a select few, creating a new class of Cold War millionaires. Wall Street saw the Cold War as a golden business opportunity, with a never-ending demand for weapons, technology, and government loans. Elite bankers and powerful lobbyists worked behind closed doors, shaping policies to ensure the cash kept flowing, regardless of the human cost. The untold story of the Cold War is written not just in history books, but in balance sheets and investment portfolios, where profits soared as tensions rose. The ever-present fear of nuclear annihilation wasn't just a psychological weapon. It was the fuel for immense profits, driving spending to new heights. They found ways to monetize fear itself, turning global anxiety and uncertainty into a steady, reliable revenue stream. Most ordinary people were too busy worrying about the end of the world to notice who was quietly getting rich from their anxiety and the arms race. In the end, the Cold War was a massive economic engine, driving innovation, industry, and wealth, not just a battle of ideas, but a battle for big bucks. How do you pay for a decades-long arms race, one that spans continents and generations? The answer is simple, but staggering. You borrow. A lot. The Cold War wasn't just a battle of ideologies or military might. It was also a battle of bank ledgers and balance sheets. To keep up with the relentless pace of military innovation and global competition, the US government turned to Wall Street for the vast sums of cash it needed to fund its ever-expanding military ambitions. The partnership between government and finance became a defining feature of the era. Investment banks stepped in as the primary lenders, providing billions in loans and earning steady interest on the money funneled into defense spending. These banks weren't just passive participants. They were active architects of the financial machinery that powered the arms race. This created a self-sustaining cycle. More defense spending led to more borrowing, which in turn meant more profits for the banks. The more the government spent, the more the banks earned, fueling a feedback loop that kept both sides invested in the status quo. Banks like Chase Manhattan and Morgan Guaranty became indispensable to the Pentagon, acting as the financial backbone of America's military ambitions. Their influence reached deep into the corridors of power. These banks financed the military-industrial complex, ensuring a continuous, almost unstoppable flow of money from taxpayers to weapons manufacturers, and back to the banks in the form of interest payments. Imagine you own the local hardware store, and you also run the bank that lends your neighbor money for their elaborate lawn project. You profit from both the sale and the loan. That's the position big banks found themselves in during the Cold War. That's what big banks did, profiting from both the sales of military hardware and the loans that made those sales possible. Their profits grew with every new contract and every new loan. The ever-growing national debt became a golden goose for bankers, with the US government as a customer who could never go bankrupt, always able to borrow more and always needing more weapons. The constant threat of the Cold War, nuclear standoffs, arms buildups, and global tension was the perfect environment for sustained profitability. As long as the threat persisted, so did the need for loans and spending. Ironically, a peace treaty or a sudden end to hostilities would have been disastrous for the bank's bottom lines. Their profits depended on the world staying just dangerous enough to justify endless spending. The Cold War kept the world at the perfect temperature for long-term profit. Never too hot for catastrophe, never too cold for disarmament. The financial architecture of Cold War finance wasn't just a backdrop, it was fundamental to the operation of the entire era, shaping not only military policy, but the very structure of the global economy. In the tense years of the Cold War, the government needed the public to chip in, not just with their support, but with their wallets too. So they launched massive campaigns to sell war bonds, encouraging every American to do their part for the nation's security. These Liberty bonds weren't just financial products, they were symbols of unity, making ordinary citizens feel like they were on the front lines in the fight against communism. While you, the average American, received a modest return on your investment, The real winners were the investment banks, who pocketed hefty commissions on every sale. Banks acted as underwriters, buying up large quantities of bonds at a discount from the government, then reselling them to the public at full price. In this way, they became the middlemen, turning the nation's patriotic fervor into a steady, reliable revenue stream for themselves. The U.S. Treasury would issue bonds to banks, who then distributed them to millions of Americans eager to support the cause. The difference between what banks paid and what they charged the public, the spread, was pure profit, adding up to millions over time. So, while your grandmother's savings bonds helped fund the construction of bombers and military equipment, they also padded Wall Street's bottom line. Banks facilitated these transactions without taking on much long-term risk, collecting fees and commissions as the government continued to sell more bonds. The more bonds the government sold, the more money flowed into the coffers of America's biggest banks. In the end, patriotism wasn't just a matter of national pride. It was a booming business for Wall Street, blending civic duty with corporate profit. Financial elites cashed in by investing in defense companies. The defense industry boomed with government contracts, turning modest firms into giants. Banks and financial institutions owned large shares of these companies. A cozy triangle formed between the Pentagon, defense contractors, and Wall Street. The Pentagon's demand for new weapons drove up stock prices and profits. Taxpayer money was converted into private profit, with investors owning a piece of the action. Defense stocks were safe and lucrative, with the government as the only customer. The Cold War's perpetual threat ensured a steady flow of contracts. Investors favored policies that kept the defense industry thriving. A peaceful Cold War thaw could devastate stock portfolios. Financial interests aligned with perpetual conflict, driven by rational self-interest. The Cold War was deeply shaped by the shadow of the bomb, referring to the ever-present threat of nuclear annihilation that dominated the era. The devastating use of atomic bombs in World War II, particularly the bombings of Hiroshima and Nagasaki, instilled a profound fear of nuclear war, which then influenced political decisions, military strategies, and even cultural narratives throughout the Cold War. The bombings of Hiroshima and Nagasaki created a global consciousness of the destructive power of nuclear weapons. This fear of potential nuclear war became a constant backdrop to international relations, influencing both superpowers' actions and shaping public perception. Even during the height of the Cold War, a major concern was the risk of escalation, with even small conflicts potentially spiraling into nuclear war. The development and stockpiling of nuclear weapons by the United States and the Soviet Union were driven by the need to deter each other, a strategy known as mutually assured destruction, MAD. This arms race led to a massive buildup of nuclear arsenals on both sides, increasing the potential for catastrophic consequences if deterrence failed. The possibility of nuclear war was a constant threat, impacting political decisions and public life. The shadow of the bomb influenced foreign policy, with both superpowers using the threat of nuclear retaliation to deter each other from aggression. The fear of nuclear war shaped international alliances, with Western Europe relying on the US for protection. The arms race itself became a key factor in shaping the dynamics of the Cold War. The Cold War anxieties about nuclear war found expression in literature, film, and popular culture. Many works explored the themes of nuclear holocaust, dystopian futures, and the potential for human extinction. Examples include Neville Shute's On the Beach, Walter M. Miller's A Canticle for Leibowitz, and films like Dr. Strangelove and Fail Safe, which portrayed the horrors of nuclear war. The shadow of the bomb also spurred anti-nuclear movements, with citizens protesting the arms race and the threat of nuclear war. Notable examples include the Greenham Common Women's Peace Camp, where women protested the deployment of nuclear missiles. In essence, the shadow of the bomb was not just a physical threat of nuclear destruction, but also a psychological and cultural force that profoundly shaped the Cold War era, influencing perceptions of security, political strategies, and artistic expression. After World War II, Europe was in ruins, and the US launched the Marshall Plan. Officially, it was to rebuild Europe and contain Soviet influence, but it was also a money-making opportunity for American banks and corporations. Aid was given as credits to buy American goods, creating a guaranteed market. American companies profited, and banks facilitated transactions. Banks like Chase and Citibank expanded globally, earning fees on every transaction. The Marshall Plan built a global empire for American finance. This model mixed aid with business, applied to development loans worldwide. Loans required using American firms, with banks managing financing. It was a way to win hearts and minds while ensuring American economic interests. The Cold War's economic policy was a blueprint for global financial dominance. The Cold War's constant uncertainty was a goldmine for speculators. Market volatility created opportunities for vast profits through trading. Crises sent markets into turmoil, but savvy traders saw discounts. They bought assets at low prices and sold them for massive profits when calm returned. Currency markets were another playground for speculators. Traders bet on currency falls during geopolitical shifts, making fortunes. Commodities like oil soared during crises, offering more profit chances. Information and nerve were key, with insiders having better insights. They rode waves of public fear, buying low and selling high. The Cold War's anxiety was transformed into a tool for wealth creation. Speculators thrived on the chaos, turning fear into financial gain. Financial interests shaped the Cold War through key decision-makers. James Forrestal, former Wall Street banker, became U.S. Secretary of Defense. He advocated for a massive military buildup, aligning policy with Wall Street's interests. Forrestal saw the conflict as a global competition for resources and markets. George Kennan's containment policy focused on economic power. He believed capitalism's success would lead to communism's collapse. The Marshall Plan placed American banks and corporations at the center of U.S. policy. President Truman's administration fused government policy with financial interests. The Truman Doctrine justified unprecedented government spending and borrowing. The financial elite managed and facilitated this economic planning. They weren't just fighting a war, they were building a new world order. The business side of the Cold War was hidden from public view. The narrative was one of patriotism and ideological struggle. The financial machinery, loans, investments, speculation was rarely discussed. The media focused on dramatic stories, not financial transactions. The public understood the political and military dimensions, not the economic engine. Policymakers framed financial actions in the language of national security. Loans and investments were patriotic duties, not business transactions. The financial elite operated in the background, shielded by the fog of war. The Cold War's business was perfect, motivated by fear, guaranteed by the government. The public supported policies they believed kept them safe, unaware of who profited. The financial elite thrived, their profits hidden from scrutiny. The Cold War's end marked the end of a 40-year payday for finance. The financial system adapted to new threats, continuing the cycle of profit. The global financial architecture was forged during the Cold War. The military-industrial complex didn't disappear. It adapted to new threats. New enemies justified military spending, creating fresh profit opportunities. The Cold War's playbook proved durable, with conflict always about money. War and conflict are about who pays, who benefits, and who profits. The financial elite won a quiet battle in boardrooms and trading floors. The Cold War's legacy is the understanding that conflict can be profitable. The financial elite's power, solidified during the Cold War, continues to shape our world. The Cold War may be over, but its financial legacy endures.